Well, hello everybody. Welcome back to the channel. My name's Max. The station's name is The Covered Caller. I got my dog Jackson. Hey Jackson, you want to come see everybody? What's the matter? What do you want? Jackson, you have food over there. You have food over there, buddy, okay? You're good. You're good. There's nothing you need to do over here, okay? Everything's good. All right, guys. Yeah, I like to analyze these high yield covered call funds. Any type of income fund, but especially the covered call variety. All right, so let's see what's going on with the market. I was looking at the VIX over VIX indicator, and it still doesn't look super encouraging, but we'll see. All right, so here's S&P futures. Well, these look fine actually. This is just going straight sideways. Nice rally today. Closed on or close to the highs. I mean, well, closed off the highs a little bit, I guess. Let me see what the closing print was. Boom, boom, boom. Yeah. Well, anyway, we closed off the highs a little bit. I guess I just need to put on a daily bar. So the daily candle, look at that. The daily candle right here is not this candle. This is the New Day's candle, this red one, but this green one right here. Pretty narrow range. I mean, one of the narrowest ranges we've had in about in a while. All right, so let's look at NASDAQ. But anyway, basically that's a long way of saying that that ES is basically not doing anything right now. NASDAQ down a quarter point. Let's check out Bitcoin futures from Chicago. Let's check out Bitcoin futures. Oh, well, that's a 5-minute chart. I was going, that thing's dropping fast. I'm used to looking at the 30-minute chart. Okay, so here's the chart I'm used to looking at. And on this one, you could see a reversion to mean play. I mean, the market got way oversold, and it bounced. And where did it pause? Right up here, the previous place where it had been comfortable with two-way trading. So it just fell back into trade. It fell out of a trading range, and now it's snapped back into one. So hopefully next time it'll fall out the other direction, going up instead of falling out going down. It'll. All right, let's check out gold. Gold futures are trading this. Well, they trade 23 hours, of course. They're down about half a point. There's really not much you can see from there. Silver futures. They're down a point and a half. Although if you look on the chart, silver's been so volatile lately. I mean, I don't like. Where's it down a point and a half from? I mean, I guess from right here, I guess it dropped from 83,430 to 81. Yeah, it's down a point and a half, but it's just so volatile. It looks like just a little tiny move. That's actually more than a % move because this thing is just, silver's just, insane lately. All right. Max factor, the daily factor. So like I say, my name is Max, but my favorite tool to use is something called the Max Factor, something I invented as a way of comparing these high yield funds to each other and building a database and seeing how they've done in the past. Building a history of metrics that we can go back and look for. I guess a database is what I'm trying to say. Anyway, so every night, generally, sometimes not every night, most every night, about this time, I'll come on with the show called The Daily Factor, and that's the show where we'll just do this. We look at one little sector of the Max Factor. Now, the Max Factor has the main database has. See how many funds are in there now? What the heck? All right, 222 funds. I remember when we just had like 120, and it wasn't but 6 months ago, maybe a year ago, but. All right, so let's check this out. Let's start with the highest yielding one first, and this isn't a real yield. It doesn't really pay this much. The reason I have to, but anyway, Morrow. So let's look at Morrow. So let's get out FinViz here. But anyway, it's in for Monday. Usually we do a theme, and we used to do Misty Mondays or Mr. Mondays, but I decided to start doing M for Monday, and we pick up the other M funds also. So okay, yeah, Morrow's yield max, and you can see the NAV has been in the, yeah, right here. See this, right? See this 257% trailing 12-month yield? I always feel bad because I feel like the numbers in the max factor uses are too high, and they are a little bit too high. See, yeah, that one's 250, this one's 280. It's a technical thing. It's anyway. I'm trying to think. So my yield numbers are more like a metric, and they aren't really literal. But on the ones that have a lot of NAV decay, like Morrow's NAV is under such constant, its NAV has dropped 50% this quarter. It makes the dividend look higher than it really is, because the numerator is the final price of the most recent price. Numerator, denominator, yeah, I think that's right. And it's making it artificially look higher, but it's not too much higher. It's in real life, if you count FinViz as being a better measure of it, 250 versus 280. It's the reason I can't use this way of figuring it out is because I'm also using funds that haven't been around for a year yet. If all the funds have been around for a year yet, my yields would be the same as the published yields elsewhere. My yields are more of a metric. All right, so we have Morrow yielding 282, MSTW yielding 259. So MSTW is the leveraged fund that trades strategy. It doesn't even trade strategy, just uses, but it's a fund based on strategy. Let's just say that. Same thing, because the NAV's under such constant decline. They're saying the dividend is 142, and the metric says it's 259. Theirs is closer to being right, but I have to be consistent. So mine is all right to compare with each other. But don't go buy one of these or something, or don't think this thing's going to pay to you. It's the only reason it looks like it pays that much is because the NAV, because it sucks. The NAV is getting killed right now. Anyway, then we have MST. This one's 208. This is amazing that MST's not last. For a long time, this was a perennial last place whenever strategy was doing poorly. Well, and I guess it's close to last, but in any event, 208% yield. And then we have MS2 from Rex. This thing's paying an 85% yield. Now we're getting down into the more reasonable yields, but these ETFs right here, the NAV isn't under as much pressure. Let's check out MS2. So we have it down for 85, and let's see what FinViz has it down for. I'm trying to think of a solution. It drives me crazy. I need to just call it something else and not call it yield, so people don't think. That's probably what I need to do. But just make up another name for it. Yeah, but look at this. I mean, look, the NAV's dropped. I mean, in it's 6 months from 28 to 6.4, whatever, really low. Anyway, these guys, but according to FinViz, the yield is 58. Like I say, and that's closer to reality than whatever this says. This says 85. So, all right, MSTY 75. Now that's probably pretty close to what it really pays. It's probably a few points elevated, but whatever. Maxi paying 61. Maxi's quarterly NAV is down 50%. Look at the NAV of the ones we've read of all these high yielding ones. Down 53, down 57, down 75. This is for a quarter. Now this doesn't include dividends, so MST is not really doing that bad. It's probably only down really about 60%, but it's down to some number less than that, but it's not doing great. But then we have MS2 with the more reasonable. Well, it's still down 48. That's not super reasonable. MSTY down 46, not super reasonable, but it's better than being down 75 or 57. In any event, then we have Maxi down 48. When you lose half your NAV in just a quarter. That's not generally bullish, right? All right, MSFO. Now these yields are more in line. These yields are more in line with reality because the NAV hasn't dropped so far that it makes it just totally artificially. Like MSFO likely pays around that amount. You could likely really realize that type of yield at 36%. Maggie, we have 36%. Murny paying 24%. Now Murny's NAV is actually plus 12% this quarter. And that, like I always say, does not include dividends. The NAV alone is plus 12%. And of course, it's paying weekly payments. So that's just gravy. Whatever it pays, it's only 24%, but whatever, because it's gravy. You're killing it on that one. We have MSFY. This one is the NAV's down 24% and the yield's only 22%. And then we have MLPD. Now this one, let's go look at FinViz on MLPD. This one's been hot lately. Some of you guys have this one. I heard you talk about it. I've heard people talk about it in Discord. This is a Global X energy and infrastructure covered call ETF. Energy's hot lately. Energy is hot this quarter. So that's good to see now. You know, FinViz says the yield's 10.75 and my yield will be right about 10.75. Right? Oh, no, it's 24. Like I said, I just need to call this something else. I just need to, it makes me mad I can't solve this problem. The only way I could do it is kick everyone to make you have to have a year's data. If everyone had to have a year's data, I could figure it the right way. But when I'm adjusting for shorter time periods, it just doesn't work. All right. That's disappointing. I need to quit calling it yield. I don't want people buying this thinking, you know, MSFY pays 22%. Or MLD. Let's check out and see what MSFY does. 22.05. Well, like I say, some of them it hits right on 22%, and then some of them, you know, it totally misses on, like MLPD. All right. And anyway, the last contestant's another oil-filled one. It's MDST. So let's look at MDST. This is the Westwood Salient Enhanced Midstream Income ETF. It pays the lowest yield, but like oftentimes when you pay a low yield, not all the time, but lots of times the low yield leads to better NAV performance. And it is true in this case. So let's go back, let's rank it by NAV return. So the only ones that are positive on NAV return are Murny, MDS, and the two energy ones. Everything else is negative. Let's look at the Quandex. Now the Quandex, you have to have been around for a year to be in the Quandex, but let's just, in the MLPD is #1 in the Quandex. The Quandex is the same thing as the max factor, but it looks at a year look back period. But in any event, we have MLPD, MSTD, and then we have some. It's interesting. Look at some of these other ones that are negative on NAV return. So not having a great quarter, but are still doing pretty well in the Quandex. MSFO and MSFY, I mean, you could do worse than those two. I mean, for instance, you could have MSTW or MST. So let's see who the most stable ones are. Of course, the most stable one, so the 154 means it's 1.5 times as stable as the market. So MLPD and MDST are both more stable than the SPY, because MDST is a 1.04, meaning it's about the SPY's volatility. But then everything else is riskier than the SPY. At least it has been the past 90 days. And being the most risky, being MST, it's a 7, meaning the SPY is whatever 100 divided by 7 is. What is that, 14 or something, or 7, 16, 15 and a half, something. Anyway, it's that many times more dangerous than the SPY, or moves around that much more than the SPY. All right, so let's look at the short-term max factor. You guys probably figured out who it is because the rankings are right over there. But I mean, who else are you going to give it to? MDST. So MDST and MRNY. Now look at this. You might say, well, why the heck did MDST? Why does the max factor rank MDST ahead of MRNY? And it comes down to MDRY is 5 times more dangerous, or has been 5 times more dangerous than the SPY. So, on a risk-adjusted basis, MDST looks one heck of a lot better to me. And there's not going to be an editor's choice override tonight. We're going to stick with MDST. Absolutely. Absolutely. And the second place is MLPD. We're dropping Murney down to third place just because of the excessive volatility. It's just harder to allocate in a portfolio when you have something that's up 10% one day and down 10% the next. You'd much rather have an asset that only moves up a little bit and down a little bit every day. It's easier to allocate because you don't get margin calls. Anyway. All right, what's up with you guys? We got Marcus in the house. We got Bon in the house. We got William. And we got Chad from the great state of Texas. We got Marcus from the great state of Pennsylvania. I don't know where Bon or William are from. I used to know. I want to say Bon's from Florida or something, but I don't know. That may not be right. All right, guys. Well, what else do you guys want to look at? So I had some other stuff to show you. What do we want to talk about? Oh, yes. Oh, I know. We're going to talk about stuff. Oh, my gosh. Hang on. Okay. We got all kinds of stuff to talk about. What's up, Trucking for Dividends? Heck yes. And let me remember to put my disclaimer up here. Remember, guys, it's not financial advice. Consult a professional financial planner. And all right. So I'm going to open on this other screen where you guys can't see it. I'm going to open my email because Chad sent me an email and I haven't looked at it yet, but we're going to talk about that email tonight. I believe Chad sent me one. We'll find out here in a second. So let me open this. All right. And so, yes. And let me make sure it's safe for work. Heck yeah, that looks good. Okay. I guess I should just do it on this screen. What difference? Well, let me make sure. All right. Okay. All right. So Chad belongs to M1 Finance. I'm sure you guys have heard, or has an account in M1 Finance. I'm sure you guys have heard about M1 Finance. And it's pertinent to the max factor because I'd say, what was it? Probably last summer, something like that. Maybe last fall or something. Chad says that he's putting together, I guess you can build your own allocation or build your own like ETF or your whatever. I don't really get what M1 Finance is, but anyway, want to put together what they call a pie. So you can allocate your own thing and then trade it and then look at it as like an ETF or whatever. What I did is I looked at the max factor. Of course, I tried to get him to get blocks because I'm obsessed with blocks. And I chose a few. I chose a few that I liked. Well, they didn't have blocks, and so then a couple of the ones that they weren't available. So then I went to the max factor to try to find some other ones. Like for instance, I remember I wanted K Gold, but I don't think it was out yet, or I think it had just come out. We couldn't get it. Well, iGold was the next best gold one on the max factor. If you guys ever watch the max factor, you've seen iGold. Pretty impressive at times, and then I just went down the max factor like TLTW. I mean, I don't even like that one, but it was on the max factor. I mean, I like it. It's fine, but I mean, I just basically put it on the max factor. STTY, you never hear me talk about that one. Basically the same thing as the Round Hill XDTE, very similar strategy. I do like T-SPY and I do like KQQQ. Those are probably the ones I probably picked on my own. Was probably blocks, KQQQ. At the time, I don't think K Yield was out yet, So K Triple Q and T Spy are ones that I was comfortable with anyway. But then the rest of them I just chose from the daily factor. Anyway, I guess it's done pretty well. So how much is it up? Do we have do we have any other data to look at here? Let's see. Well, that's just some other stuff, I think. Oh no, that's the rest of it. Oh, I did have him get blocks. Okay, I'm sorry, Chad. All right. Well, anyway, blocks is the worst performing one. It'll be good on the way up. All right, my bad. We got blocks and we got TSLP. Now TSLP must have been in the daily factor because that's not one that I'm just naturally talking about all the time or whatever. But Curve does a great. I do like Curve, but anyway, okay. So we had two losers. I'm sorry, I didn't see that the first time. But anyway, the winners were Chippy, iGold, IWMI, TLTW, T-Spy, SDTY, and K Triple Q. So Chad, in the afternoon show, Chad was asking if we should reallocate these, and we could take it, put it. What do you guys think? I mean, rebalance them. How far out of balance has it grown? I mean, what's this? Was it 12 and now it's at 18? Is that what that means? Or it was at 12, now it's at 11? Yeah, that's right. Because the ones that are doing well, they grow in size. That's right. And the ones that are doing poorly shrink in size. Right? Or maybe the second number is what the allocation was. I'll look at we'll look at what you guys are talking about. Anyway, I'm sure it's doing well. I guess it's doing pretty well. I mean, the Chippy, I hope the Chippy's making up for what blocks is losing. Oh my gosh, I feel bad. But I mean, yeah, obviously anything crypto is just getting murdered. So I just had basically blocks. It's the only crypto exposure I had. Probably some in the K Triple Q a little bit maybe, but basically, I guess that was a blessing in disguise. You have no idea. Okay. Well, I bet it is doing all right. Well, I guess we can look here. This is probably what it's up since inception. We have one up 20, one up 20, one up 11, and then flat, up 4, up 3, down 8, and down 11. It's probably up. It's probably up slightly. All right. So, but yeah, I'd say if you're going to rebalance it, I mean, it's your account. I mean, I gave you my opinions. They're doing all right. But I mean, you could keep it rebalanced, or we could look at the daily factor and see. Let's look at this. Let's do it this way. I have an idea. All right. Well, I have an idea. Okay. The new max factor. Okay. So the last. Well, when was the last top 10? Is it? There is. Well, no, that's S. That's the S show. I save all these so I can, because I'm trying to build a database, but I guess I need to probably label them too. There's the top 10. This is the most recent top 10 or top 20. And if you saw my show this weekend, this was them. I mean, XOMO was number 1. Fiat was number 2. K Gold was number 3. DOGG was number 4. Then we have ASGI, XLEI, SLJY. So what I would say, maybe we drop some, maybe we cut the losers. I don't know, because sometimes the losers recover, but maybe let's cut, or trying to think of a way to do this. But if you wanted to kind of stick, just for fun, we could, you could maybe add some XOMO and K Gold, and you could maybe drop iGold. Maybe if there's better stuff available now, maybe drop iGold and put K Gold in there if it's available, and maybe drop one of the ones, drop blocks if you want. It's not doing well or whatever. I mean, and then maybe put Dog in here. DOGG is the highest diversified one. If they have DOGG, And that way, if we keep trending towards value, that's probably what I would, if it was my account, I would probably adjust it. That's why I built that daily factor. I built it to help use my brother-in-law's, to help manage my brother-in-law's money. But really, I mean, I override the max factor all the time. Anyway, I need to be more disciplined. Yes, I do want your opinion. I do want to. I say rebalance, and maybe even. Yeah, I know it's not a lot of money, so I get it. It's just for fun. But yeah, I would say let's if it's not a lot of money, let's drop iGold. I mean, if it's it's just for fun. Maybe let's every quarter let's replenish it with the hottest funds now, because Blocks was a really good investment back at the time I recommended it. It has been doing great. It's made people a lot of money. It's still but anyway, I didn't mean to get you in Blocks right there before the crypto. Oh, yeah, they probably won't. So it's just since this is just for fun, it's no big deal. But if anyone's watching, for real or whatever, I mean, I do think maybe it might be time to keep an eye on the daily factor. Just if nothing else, to pick up on the trends. Look how many energy. Look how many energy ones. WEEI is energy. XLEI is energy. XOMO is energy. MDST is energy. So you could use it to pick up themes, and we talk about this all the time. We've been talking for a month now. Oh my gosh, it's all energy and gold, energy, gold, and silver. For a while, it was gold, silver, and like Google and AMD, but then they fell off the face of the earth. Now it's just gold, silver, and energy, and value stocks. But now value stocks are in vogue. But yeah, it's probably just like $100, or it's probably such little amount of money. It's just for fun. It's no big deal. Yeah, and I'm not saying, yes, I'm still a believer in Blocks. That's still, like I say, I mean, I'm an influencer. I'm trying to give my honest opinion. I think Blocks is one of the better ones out there. One of the best ones out there right now. I really like I think the income stack products are cool, and some of the total stuff, but it's too early to tell. So, but yeah, through a full cycle, can you imagine what Blocks would have done if you would have got it after Liberation Day, which I would have, because I know you guys remember, is I was looking to get long cryptos, and I bought LFGY after Liberation Day because I wanted to be long, and it did great. But if I would have had Blocks instead, my gosh, that'd been something else. I'll have it next time. I can guarantee you that. Who knows? By next time, Tuttle or something might come out with something even better. Yeah, I don't know. But right now the lightning spread and the income stack are the two, I think, best strategies out there right now. You're going to keep it on Blocks. Okay, yeah, keep it on Blocks. But I'm trying to I'm a systematic guy. I'm trying to think, okay, well, maybe we could just rebalance it then. But is there no one you want to drop? You don't want to put in somebody? I mean, anyway, here's the thing. If there's one you don't like, I would recommend DOGG. I've been impressed with that. There's some kind of value in case the market keeps going poorly this year. Put in a little DOGG if they have it, or CAIE, something, the market likes, auto callable, something steady, SFAR, something. You could choose it. Heck yeah. Well, I'm saying, that's what I'm saying. I'm going to tell you, I'm saying let's drop a growth one out of there and pick and put dog, or yeah, something, put some value, get some value in this thing, and forget about dog. Once again, I'm overriding this. Let's put CAIE in there. That's my pick. And if CAA is not there, some other kind of auto callable, CAIQ, whichever auto callable they have, it doesn't matter. And if that's not available, SBAR. Yeah, the channel fund. There you go. That's a good name for it. But anyway, but I forget what was in it. But if that's the one recommendation I would make, is let's add a little more value somewhere if we can. I don't know if they charge you to do. I don't know how the game works. I don't know if it's. I think M1 Finance is free, right? But everything's basically free now. But it's like even freer, I think. Yeah, but that's what I'm saying. Let's get some value or some energy in there somehow. Maybe let's add a little a little dog or a little MDST or something like that, or a little CAIE, whichever one, or SBAR, one of those four, and we'll get it a little steadier. And I don't have it up anymore, or we could figure which one to drop. I was just saying blocks mechanically because it's doing the worst, but drop the other one that's red. I forget what it was. Let's drop that one and slap in a some kind of value proposition, and then we'll look again right before summertime, and then and maybe by then the market will be different. Maybe the market will sell off, and it'll have reset or whatever. We can look into it. But yeah, that's what I'm saying. See, get CAIE. It's hard to find a much better fund than that. CAIE is killing it. Yeah, TSLW is all right, but I mean, I think we should get CAIE in case the market keeps going bad. CAIE is safer, and I just don't think. I guarantee you, we're going to get a 20%, if not bigger, sell off at some point this year. Maybe even in the first quarter. I mean, I can't imagine. But yes, if we do get the big sell off, like an after Liberation Day sell off, we'll meet back here, and maybe at that point we'll reallocate to some growth, put in a TSLW or something. But I'd say slap in a little CAIE if you wanted my opinion. I think that is a good one. Yeah, and I'm fine with you keeping blocks. I'm just trying to be mechanical. I mean, I just feel bad that's doing so poorly, but I mean, okay, which one? Pick a red one. Okay, which one are we taking out? Pick a red one. Yeah, all right. I don't have it up anymore. So I thought we only had two. I thought we had blocks and one other red one. It was actually TSLP. That's why you're giving me TSLW. I get it now. I get where you're going with that. Yeah, that'd be fine. Drop TSLW, drop TSLP, put in TSLW, but then drop something risky and put in CAIE or whatever. Yeah, TSLP was right. I get it now. I don't know. I still think the best decision is drop TSLP and put in CAIE. Let's drop a tech stock and put in some protection. And then if we do get the sell off, we'll get to Tesla. We'll get tech. We'll get NVIDIA and Tesla if we can get a 20-30% sell off or something like last year. Yeah, there we have it. And then we keep track of it. So I guess I really should make some content on it. That's why I had you send that to me. I mean, I guess after it's done, email me one more time the new allocation, and I'll make a spreadsheet, and I'll put the allocation into a spreadsheet, and then you won't have to mail it to me anymore. And we can and I'll make a pie graph and stuff. I should have done that off the get-go. So do your deal and send it to me, right? All right. So what have I missing here? Skeptic is saying KO blocks GX, probably the only ultra yielders worth holding, in my opinion, or in his opinion. Absolutely, yeah. GX is a good one. I mean, I know a lot of people are happy with that. And K-Yield, yeah. K-Yield's something else, but it did drop 11% in one day, and I know people are disappointed in that, but anything that's trying to pay you 30 or 40%, 50, 60% is just, I mean, the level of risk you have to put on to pay that kind of yield is just, sometimes that kind of stuff can happen. It does happen. Like I always say, I don't think triple QI will ever drop 10% in a day. And I guess it will if the NASDAQ's down 10%. But I mean, think how often the NASDAQ's down for 10%. It was down like 7%. And I mean, it can happen. I mean, but anyway, K-Yield's up 2.4% overnight. Well, that's great to see. There's still earnings going on. Maybe they had somebody hit earnings, or maybe they're just reacting positively to the market. All right. So what else do we have to look at? Have we looked at this is the final on the rolling return. I mean, Blocks is number one loser right now. I mean, ULTI has been the number one loser up until a couple of days ago, and now it's past Blocks. But yeah, K-Yield, just to show you, I mean, K-Yield was doing great. K-Yield's this green line right here, and K-Yield, and the red line above it is GPTY, just for comparison. GPTY is a good blue chip fund. I know that I think a lot of you guys would agree with that. just like K yield. GPTY pays 20, 30% or 30, something like that, just like K yield, right? They trade together. They have similar, GPTY is a little bit blue chippier type of stocks than K yield. But in any event, they're trading right along, and you could see K yield right here pulled away and almost got above zero. It got within 3% right there, and then it got within 2% of being above water. And then this last pullback hit, and Howard, if this would have been Alti, this wouldn't have happened because Alti uses callers. But it's not. Howard doesn't use protection. He uses protection in a different way by using non-correlated assets and stuff. But his non-correlated asset scheme doesn't always work, because sometimes, especially in crash, or especially when the market's dropping fast, and we basically had a crypto crash. I mean, and a gold and silver crash in the past couple, right in here, and it just. I mean, look at K yield went from being up, or from being only down 2 days later to being down 10, and then they go sideways for a few days, and then they drop from being down 10 to being down 17. Now, that was the day that, now I think this was the day that gold and silver crashed. But that was, that gold and silver thing was incredible. I mean, some of the biggest moves I've ever seen have been in the past week. I mean, what about the MicroStrategy move off the bottom 25% up? And what about gold or silver? I've never seen anything like in my whole life. I don't remember seeing. I'm not really a commodity trader. Never really traded commodities, but so I may not have. There's probably been other times. I know silver was crazy in the late 70s, early 80s. But there's probably been other times. But to see an asset drop from 120 to drop 50% from New Year's Eve, really fast. I mean, it dropped 40% from New Year's Eve in 2 days, and then bounced, and then, I mean, that's amazing. That's not not usually a sign of a healthy market. We're probably all kinds of topping bubbles. I mean, you could be in a bubble for years. This reminds me of the late 90s, early 2000s. I'll give Howard credit too, but I think some people, I'm going to forget who it was. I'm not trying to pick on anybody, but there's some people are getting disillusioned with it. Anyway, but, here's what I'm trying to say. Howard has a reputation for being on the safer side as far as managers go. And I'm not disputing that. But Howard's also trying to pay a 30, 35, 40% yield. So, he can only do what he's going to do. So if you really don't want to lose 10% in a day, because that can happen in any of these ones that pay 30, 40, 50, 80%, just stick with the indexes, NEOS or JP Morgan product, or even a Tap Alpha product, or Tap Alpha would be a great one, non-leveraged, something like that. Even an SDTY or XDTE, something like that, because it can darn sure do that. But yeah, I'm not distracting from Howard, but when you have that much pressure on you that you're trying to generate 30 to 40%, you're going to have to take a swing at some balls that other people might not swing at, and you're going to have some massive strikeouts occasionally. So, but yeah, of course I give Howard credit. Of course, we don't have any the only bad managers that I know of are the guys that manage Feet and 5e. Those guys ought to be fired. I mean, the guys that Dorsey Wright that do the Feet and 5e. I mean, this is the worst fund in the universe. All right, pick a fund everyone hates. Okay, Alti. All right, ULTY. It's spanking feet, and everyone hates it. So, I mean, what does that tell you? Let's go back to inception. And what's Feet has never been above zero. It's not its NAV. Not only is his NAV never been above zero, his total return has never been above zero. This plot is plotting the total return, not the NAV. You know, like I say, ULTY, you know, it's not been that impressive, especially lately, and it's spanking it. Not only that, and it protected capital on the way better. It's growing faster and it protected capital. So that I'm just saying, Feet is a uniquely poor fund, and I hope no one's involved in it. I mention it every chance I get. I bought it too. I mean, I fell for the hype or whatever. So 5E is the same fund as Feet, but but instead of doing covered calls on the whole portfolio, they do a 60% covered call, and then with 40% of the money, they just buy the stock, the real stock, not the covered call thing. So you think, okay, well, this should be safer, this should be better because at least they have the real stock. Well, I mean, yeah. The problem is though, you have to pick good stocks, and these guys could not pick their. I mean, you know, they couldn't find their ass with both hands. These managers. I mean, whoever's at Dorsey Wright, whoever designed this strategy, he literally couldn't find his ass with both hands. Look at this. I mean, you know, he has. I mean, it's supposed to be a momentum strategy. How in the heck do you have Reddit on a momentum strategy? I mean, maybe on a longer time frame. I know how they do. They're probably looking at a longer time frame. Okay, but my gosh, so when you look at that long of a time frame, you have to sit through massive drawdowns. I can see why Murray's in there. Murray has shown definitely positive momentum. I mean, AMD, what I'm thinking is they must not change these, but every quarter or something. It's just they're too slow. How could you have AMD in here on a momentum strategy? You could have AMD in here in a value fund or in a growth fund. I believe in AMD's prospects for the future. Well, oh, of course, AMD, yeah. But in a momentum strategy, no, thank you. No freaking thank you. I mean, these guys, like I say, these guys, Dorsey Wright has no clue. I don't know why. If I was Jay and Mike, I would shut this fund down. It's embarrassing. It's embarrassing. Or I mean, let's go there. Or I guess it's Mike, probably Mike, and it's the partners, whoever the partners are. We don't know who the partners are at YieldMax. It's a private relationship. So that's why I said Mike, because he's the partner, but general partner probably. But I really don't know if it's Jay or I don't know if Jay's. But I mean, how many assets? This only has $11 million assets under management. This isn't making them any money. I mean, it's not making any investors any money. Maybe at some point in the future there'll be. I mean, I don't know. I'm not feeling it. I'm not feeling it. Okay, well, yeah, let's talk about SFAL. I'll stop ranting. I'm sorry about ranting. SFAL still maintaining. It's just hard to tell what's going on with it anymore. SFAL is basically like a hedge fund at this point. I mean, because they just kind of do their own thing, right? They used to sell volatility premium using a term structure trade with futures. It was extremely complex, something I've never done, but I've read about it in books, and read about it in investing books. It's similar to an option strategy, but they could sell premium with futures. How? Also with the future spread, the time spreads. Anyway, but yeah, then they switched off that, and now they do kind of a hybrid strategy. So they're a fund of funds. They have some SPUC. I mean, that's another simplified fund. They have some QIS. That's a quantitative. That's a hedge fund strategy. If you've been doing great, you can tell by looking at that chart, right? Going straight down. They have some bonds. They have AGGH, which is a good thing to have. They have some bonds. I mean, stable out the portfolio, just 7%. And then they have some bucks. So that's basically cash or short-term treasuries, I bet. Shorter-term treasuries. And then they actually have some notes and obligations. I guess those are bonds or bill. I get bonds. No, it's not bonds. It's a bill, I think, at that point. Anyway, so they have some. Yeah, they have some T-bills because they only go out a couple of months, of course. And then they have, of course, bonds are the ones that are 20 years or more, right? I think, or 10 years or more. Bonds, notes, and bills, or that's what it is. Bills are 2 years or less, I think. Notes are. They talk about the 10-year note, And then when they talk about the 20 years, I think it becomes a bond at that point. But anyway, so yeah, SVOL, now they're just kind of doing, I guess, whatever they want. But anyway, who cares? I mean, it's just hard to evaluate. But let's see. I bet they don't suck as bad as, I mean, let's compare them to 5e and just see how bad they beat 5e. My bad. And SVOL has not been, I mean, it ran through some serious problems. That's why I thought it was a good comparison. People just loved SVOL a long time ago and then have been hating it and not able to figure it out. Kind of like Marcus is saying. Marcus is saying he recently checked all the underlines. He thinks Simplify is just trying to have the NAV sustain itself, which is working, yeah. So it can constantly pay. I mean, yeah, I mean, isn't that the dream? If you could just invent one of these funds where the NAV didn't move and it paid 19%. I still don't know if that's the ultimate solution, though, because the ultimate would be you want one where the NAV moves and it pays 19%. And it, like blocks, the NAV can move in the direction of the market, same magnitude, same direction, and you get the money. But I mean, this is pretty good too. All I'm trying to say is if you really had a fund that just straight didn't go anywhere, you're sacrificing any potential return from the NAV. Now you're also preventing yourself from having any type of decay in the NAV. So, yeah, I think that's as good of a theory as any, Marcus. So let's compare this to a real fund, though. I mean, 5e sucks. Let's compare. What's something that SVOL should compare to? I mean, we used to compare it to FEPI a lot because they paid. I mean, they've been around for a long time. I remember FEPI and SVOL have been around ever since I've been around, and I used to always use them to compare with each other. Now FEPI's basically Mag 7, so it's it's benefited from. I mean, it has a lot of Mag 7 exposure in there. It's actually big tech and communication stocks, but it has Facebook, Broadcom. It has a lot of them that are Big 7 or Mag 7 and Mag 7 adjacent. So really, it's a fair. If we want to do a FEPI comparison, we really need to compare FEPI to GPTY, which is YieldMax's version of FEPI. And you can see GPTY, like we were just saying, it's one of the better funds out there. One of the best. That's one of the 2 or 3 handful of best YieldMax funds, in my opinion. Anyway, FEPI's a good fund also. FEPI is a really good fund also. FEPI's NAV's gone from 50 to 42. GPTY's NAV has gone from 50 to 39. But GPTY paid a little extra dividend. And when you factor in a little extra dividend, you've been better off with GPTY, at least over this time frame. Let's go back a little further. I guess, GPTY, yeah, GPTY came out January 23rd. Yeah, that's right. Well, that's been a great fund. That has really been a good fund. I can't believe I sold all of it. That was another way I had to risk after Liberation Days. I bought GPTY and then I sold all of it. Anyway, it was a nice profit though. All right, guys. Well, that's about all I got for you guys tonight. Unless there's any more questions, I'd be happy to stick around. But in the absence of that, I'm going to go edit my video. Look for the video to be out like at noon tomorrow. I have a really good interview today. We really went in depth on ISSB and ISBG. It's way better than my first one wasn't that good. So it wasn't good at all. It was bad. So this one is good. And I think you guys are going to like this. Remember, this is not financial advice. Consult a professional financial planner with all your professional financial planning needs. There's my PayPal. It's going to stay up for 10 seconds. But PayPal.me, Max Convexity. If anyone wants to donate, I appreciate that. And also, always, of course, please like and subscribe and have a good evening. Be nice to your neighbors. Okay, yes. Okay, so trucking for dividends. I'm happy to talk. If you guys want to talk, I'll talk all night. But if once we run out of stuff, I'll get out of here. You're thinking of selling QLDY for Chippy. Um, yeah, I mean, it's hard to argue with Chippy. It's hard to argue with Chippy. Between those two, I prefer QLDY. That's just me, though. And I'm just talking the way it's structured, the way it's built. I think in other words, Chippy is great as long as the microchips are great, and they've been money lately. So if you're bullish on microchips, yeah, go for Chippy. I just, you know me, I like diversified stuff, and I like lightning spreads. I think QLDY will beat it in time, but yeah, I mean, as soon as we have a chip crash, QLDY will beat it. But whatever. It's like anything else. I mean, yeah, Chippy's. I mean, Chippy's a good one. Chippy's a good one. I mean, you could get a lot of the same stocks in. Chippy has the only thing with Chippy is it pays the super high yield, so it's super concentrated. GPTY would be a way to put on less risk or whatever. But anyway, like just as long as the chips keep going up, it'll be great. It will be great. I need to think what I need to do. Because I still have a little cash, and I keep wanting a bigger pullback. That's why I keep saying. That's why I always save a little cash for a bigger pullback. But I'm trying to think what's on my list to buy. Now I'll tell you what's on my list to buy next is well, it's all stuff after a pullback though. It's a bunch of bullish stuff. Like I like MemeY and Mago. But Mago is from Tuttle. Is it lightning spreads or is that one? One of them is actually. One of them is just covered. Anyway, whatever. I like the idea of both of them. Obviously, Mago's been doing a lot better than MemeY. Now, MemeY is one of these ones that's trying to, that's just trying to pay us. MemeY is going to be risky. It's a meme. It's, think of this one like a ULTI or even like a Blocks or even like a ULTY. I'm expecting that. Now, Mago should compare more to, because it's Mag 7, more to like a Maggie or a YMAG. So I guess those are next on my hit list, is one of those, or maybe some more some more income stacked. Let's see here. Let's see how bad Mimi's been doing compared to something like ULTI. And because that's a very fair comparison, in my opinion, and you can see, I mean, holy cow, look at this. This is just from January 20th. And MemeY was down, was that 22.5%? That's including dividends. And, ULTY is not much better. It was down 20%, including dividends. All right. But short time frame, let's look at MemeY against Blocks. I know Blocks is different. But it's similar in risk. And yeah, you can see it right there. Very, very similar. MemeY actually beats Blocks. Now let's compare it to ULTY. And of course, this is also somewhat of a fair comparison. And I would expect it to do way better on the way down than ULT, or I expect ULTY to do way better on the way down and worse on the way up. But yeah, look at those puts coming into handy. I mean, one of the first rules about making money is not to lose any. When you run a caller strategy, it helps you, not that there's anything wrong with MemeY. It's a different strategy, but these guys, they're uncapped and stuff, but they're also in a 22.5% hole right now. It doesn't make it a bad fund. It might be bad for you or it might be bad for me or whatever, but it doesn't make it a bad fund. It is what it is. But I mean, look at ULTY is no great shakes. I mean, it was down in 2 weeks. I mean, being down 5% in 2 weeks isn't great either, but I mean, heck, you know, it's better than being down 22.5%, right? Pullback only, you're buying, trucking's going to buy Bitcoin pullbacks only. Yeah. I mean, I could get more if I want. Next time I want to get Bitcoin. I don't know. Yeah, I don't know. But anyway, I'm just kind of in a holding pattern. I just don't. I just the market's just. If anything, I want to add some more inverse or something up here, or if I want to add some more protection, or maybe I should just keep the cash. The cash is also a little bit of a hedge because if it goes down, you know, I can buy some. That's what I'm going to do. I'm just going to keep the cash. I guess I'll just stick with my lineup. All right, guys. Well, for now, anyway, thanks for helping me decide. Marcus is agreeing with me that meme Y is interesting. That doesn't mean it's for everybody. You know, just like there's some people that have blocks and they love it. And some people won't touch it with a 10-foot pole. Nothing wrong with blocks. It just is what it is, right? Meme Y is going to fit in that same category, I think. All right, guys. Well, thank you so much for being here. Barring any other last minute questions, I'm going to get out of here. Well, I want to I just thought about one other thing. I'm swerving into another lane. But I was thinking about Mago, okay? And that one's from Tuttle. But I want to see how it's doing against YMAG and Maggie. And then if there's no questions, I'll let you guys go. So Mago is getting spanked by YMAG. Now, we would expect that because YMAG sells actual covered calls. And they don't do lightning spreads. Covered calls give you a downside buffer. It's not a hedge, but it's a little buffer. So, yeah, but Mago will just blow by it on the way up, in my opinion. But now let's compare YMAG to MAG-E. I know a lot of you guys like MAG-Y. I prefer YMAG, but MAG-Y is a good one too. It way underperforms YMAG. I like good, you know, I like total return. But yeah, Maggie beats it too. So now let's do Maggie and YMAG. Or last time I checked Maggie and YMAG, YMAG was much more impressive. It may not be anymore. I mean, you know, it's been a couple of months and the market's pulling back. Although I would think that the YMAG would even look better at a pullback compared to MAG-Y. So let's just see. Yeah, I mean, you know, I mean, there's people that have Maggie, just they hate Yomax is what it is. They're just, I mean, I talk to them on Twitter all the time, and I've posted this chart a million times. They just, oh no, it has NAV erosion. It's Yomax. Yomax sucks. All right, you know, teach his own. Teach his own. Anyway, whenever I'm talking to someone like that, I realize they don't know what they're talking about, and so I don't engage with them. I just whatever. All right, guys. Well, thanks so much for being here. I appreciate it, and I will talk to you later. Have a great day.